Good afternoon, everyone. I'm Christopher Gee, Senior Research Fellow and Head of Governance and Economy at the Institute of Policy Studies in Singapore. Welcome to our third installment of IPS Online. IPS Online is a regular virtual series that discusses issues relating to Singapore's governance, economy, society, and culture. Today's forum is being live streamed on Facebook. It will also be recorded and uploaded onto the IPS website and Facebook later. Please submit your comments and questions at any time to our Facebook page, and we'll try our best to answer them as we go along. The forum will last an hour and 15 minutes, but depending on how the discussion goes, it may go on for a little bit longer, and we hope that you will be able to stay with us. We see this as the start of a process of engagement with various groups on this issue, both online and off, and hope that you will be able to join us on this policy research inquiry as we proceed. We'll be considering today the topic of heightened employment risks, especially for specific groups of workers in precarious employment. This has been an accelerating trend in recent years from the effects of globalization and technological advance, but which has now been accentuated further by the COVID-19 pandemic. As we think forward in an age of pandemics and attendant uncertainty, what are the possible solutions to offset these greater employment risks? What can governments, employers, and the workers themselves do to prepare for and pool their greater employment risks? I'm afraid we won't have a lot of time today to tackle the skills and human capital development aspects in adapting to this new situation. And if we don't manage it today, perhaps we can consider this and other related topics more fully in subsequent sessions. Our four panelists today will approach the issue from different perspectives, and I hope we will have a good discussion around this topic. I won't be running through their biographies in any detail in the interest of time. They are available on our website. Our first speaker today will set the scene. Dr. John Taylor is president of the Institute and Faculty of Actuaries, and he will talk through the great risk transfer in today's session, focusing on the transfer of employment and income security risk onto workers, especially those in vulnerable occupations. John, you have the screen.
Thank you, Chris, and good afternoon, everyone. Delighted to join you from here in Edinburgh today. Yeah, as Chris said, the particular topic we're focusing on today around employment risk, particularly in relation to pandemics, is actually a manifestation of a much longer term trend. And indeed, the Institute and Faculty of Actuaries have started some thought leadership looking at this longer term trend. So I'd like to paint that broad context for you, first of all, before we get into the very specifics of this particular situation. So the Great Risk Transfer is a title we're giving to that recognises that over many decades, there's been a global trend from shifting risk from institutions, so governments, employers, onto the shoulders of individuals. And it really started in significance probably back in the 80s when President Reagan and Mrs. Thatcher had a very strong political ideology that was about removing paternalism from the state and encouraging individual accountability. And the broad bargain was that we would see smaller government, smaller benefits in return for a lighter taxation burden. And the idea was that individuals would have more disposable income themselves to determine which benefits they themselves would select on the way. And so the result, of course, has been that in general terms across the globe, we've seen a dilution of state benefits. So it's the eligibility criteria have ratcheted up and up, and indeed the generosity of those benefits has reduced over time too. That political philosophy has also had a big impact on the employment market. So it has weakened the bargaining power of employees, and as a result, some of the very generous benefits that employers have offered in the past have also been eroded. So classically, if you worked for an employer for most of your working lifetime, you would emerge at the end of that with a pension or a guaranteed income for life, so that no matter how long you lived or what happened to the stock market during your retirement, you would be safe in the knowledge that your employer would pay you a guaranteed income for life. And employers have stepped away from that over the last several decades, and now it's the individual's responsibility to decide how much to save, where to invest, and then they themselves have the risk of potentially outliving their savings during the retirement period. So it's quite a profound impact for the individual in terms of their relationship between them and state and them and their employer. And of course, there are also structural changes in the employment market that means the traditional employment relationship has changed itself. So many people are now in the gig economy where they might not technically be an employee, but they are working for companies. And I know we'll hear later today how that's affected the security of benefits. So that's the broad context. And I think the implications are many and varied. So for certain individuals who maybe are enjoying lighter tax burden, are relatively wealthy, then actually this change in environment can be quite positive, because you have disposable income that allows you to choose which benefits or insurances you wish to secure in the private market. And so you can tailor a benefits package to suit your particular needs. And if I think of many of my actuarial colleagues, that's quite a benefit for them. But actually, probably for the bulk of individuals, there are much greater challenges. One might be that they're simply not earning enough, that there's disposable income to allow them to purchase these benefits. I mean, that's a very significant constraint. And I think the other challenge is that many individuals might not have the financial literacy or awareness to even understand the risks that they are bearing, let alone be able to source solutions themselves to mitigate them in the private market. So I think there's a big question about how do individuals respond appropriately to the freedom and the choices that they have open to them. And Chris, I know you were talking particularly about pandemics. Now there's a limitation to what the private market can do in an era of pandemic. Insurance is wonderful at providing cover where there's lots of individual risks, if somebody's claiming and lots of other people aren't. But when there's a concentration of risk, as there are in pandemics, where many individuals are looking to claim, then the private market simply doesn't have the financial resources to cover everybody at the same time. And so that's of course why we're seeing government stepping in to prop up companies and to support individuals, giving them temporary income to get them through this difficult period. So I think in areas where there's a concentration of risk like pandemics, there will always be a role for government. And probably beyond the scope for today, but there's a downstream implication for the current generation of workers, in that if governments are now taking on unprecedented levels of debt, they will need to repay that over the coming decades and generations. And of course that burden will have to be probably fall on the shoulders of the current generation of employees. So I think that's a further challenge that the working generation will need to contend with in the coming decades. So I'm very much looking forward to the debate and insight today to hear how this, as I say, longer term political trend is manifesting in reality today, and hearing some of the specific implications and potential mitigations in the Singaporean market. Thank you.
Right. Thanks, John. And we'll probably come back to some of that political bigger picture issue later on in the discussion. Our next speaker is Mr. Desmond Choo. He's Assistant Secretary General of the National Trades Union Congress and Mayor of the Northeast District. He will share with us the workers' perspectives and some initiatives that NTUC has in place to support gig economy workers and freelancers. Desmond, please.
Thanks, Chris, and of course, many thanks to IPS for having me to join in today's session. I think what Dr. John Taylor has shared, that the pandemics really showed up quite a lot of things that has been structural, but has been accelerated. But I just want to get back to what this pandemic is about. Really at the core of this crisis is the need for us to protect lives and livelihoods. We need to apply ourselves to help workers on these two fronts. Partly and critically is many of tomorrow's possibilities have really become today's realities. The employment risks have been elevated and some already manifested. So for example, you look at technology adoption, it has been accelerated. The redundancy of certain job functions, especially those process-focused ones, has been hastened. Mid-back office transformation has been accelerated by years. Even though we expected for years, but now within months, it has been done. So the structural changes have really been brought forward. Even though we're not going to go too deep into retraining and deployment of human capital, but these are the essential things to mitigate employment risk. So after a few months in this crisis, we have increasing clarity on the future of the economy, but actually only slightly clearer. So we have two important issues at hand. Both have to do with jobs and some of the attendant risks. I think the first one in any of these pandemics is we need to provide a buffer for Singaporeans and businesses against unprecedented health-induced economic crisis until it is clearer what this new world order will be like. Now, the first wave of support is no different from what happens after a natural disaster, which is massive support, except that this time around is a medical disaster. Now, the government has intervened significantly. You start to see massive broad-based support, such as the Job Support Scheme, the Self-Employed Persons Income Relief, or SIRS. Now, they are needed to stabilize families until we can tide over the worst of the storm. They augment existing social safety nets, such as ComCare. Now, some of this support must continue as we reopen economies. We have looked at the examples around the world. They are risk. You can reopen and you have to shut down if you don't do it well. So the ability to manage a safe reopening is critical to help companies and workers manage those risks and get the economy going. Second, I think helping workers to transit to new jobs is key. Jobs are still the foundation of dignity and stability. There's no substitute for that. Since the start of the crisis, we start to see the labor movement, the unions really playing very critical roles, especially in the hospitality, aviation sector, to help workers to move on to secondary employment. Those sectors are going to be depressed for a while. We have helped to move the workers around, making sure that they get those jobs. In fact, we actually start to see increasing interest in becoming union members. So I help out at the SIRS Application Center daily. And you start to see a lot of the self-employed people signing up as members. So you start to see a flight to security, and we will continue to see such a movement. We have put forth some new innovations, such as the Job Security Council. It's allowed both companies and workers to come together, placing and training workers ahead of time. This, of course, on top of some of the hardship support we provided. Now, the other part is quite strange for a labor movement person to say this, but it is very much core to us, is to how to helping companies to stay afloat, really tackling employment risk from the company's perspective. Without strong companies, we would not have a good workforce. So we have put in place company training committees, getting companies to work with workers on their mitigation transformation plans going forward, so that we can keep a good workforce going. Now, the nature of the pandemic has also affected certain segments of the workforce disproportionately and put into sharper focus structural changes needed to support them. One case in point, I think, as John and Chris has put it, the self-employed persons. How can we better organize ourselves to better represent the interest? So we have expanded our UFSE platform, which is an association of self-employed persons. We look into the issues they have. We table these issues to the government. So the collective strength of being able to band together has proven very useful in helping the SEPs. Now, the next question for us is, should we start to work on certain legislative changes to enable us to do this work better? The next one, we are always going to have vulnerable segments of the economy. So how do we train, advance, and deploy better? Now, the pandemic focuses sharply on how quickly we can retrain and redeploy workers. Because once you have erosion of human capital, the whole rebound is going to be a lot more difficult. We start to see the at-risk employers stepping up to prepare workers for layoffs through retraining. That is positive, and I think we need more systems that allow us for employers and workers to come together. And throughout these first few months, I found that the cornerstone of this work is something that's quite unique to Singapore, which is our strong sense of tripartism. It's allowed a lot of the support work to be developed because there's good trust amongst companies, workers, and government. That allows risk to be managed in Singapore over the years. I think will be increasingly important post-COVID. And lastly, before I end, I think as we are locked into the COVID situation, I think we always need to keep an eye on how are we going to emerge stronger from this? How do we build structures so that companies emerge stronger, so the workers emerge with better skills, so that if and when, and it will certainly come to pass, that we will emerge stronger and that Singapore in a better state and a better economy post-COVID. Thank you.
Thank you, Desmond. And we'll probably take up some of your points about the role of unions and trade associations in a post-COVID labor market later on in our discussion as well. Next, we have Mr. Lim Yew Heng. He's Regional Head of Public Affairs at Grab, and he will discuss the potential for technology to craft solutions to help these worker groups to manage their employment and health risks, and also talk about some of the initiatives that Grab has implemented in this area for its driver and delivery contractors. Yew Heng, please go ahead.
Thank you. Thanks for inviting me to this very important panel. I think the pandemic has really raised a lot of questions and profiling on platforms like ours and the role of the gig economy. I would say it's a bit like a love-hate relationship that we're observing now. Love because I think everyone recognizes the importance, the convenience that platforms such as ours provide. But there's of course always a concern of whether the gig workers are being exploited, whether that's something that is sustainable and the right thing to do. Not easy topics, and maybe I'll share how we think about it. Right. I think first and foremost is the gig economy has always been there. It's always been a bit informalized, small scale, and requires personal connections for you to find a gig worker to maybe help you do delivery, do some chores at home. And it has always been there, and it's always been actually particularly critical for segments of our societies who struggles to find formal employment. And that has been a problem for the markets that we serve, also in Singapore. And in recent years, as income inequality becomes more pertinent, really the need to bring this sort of a sticky underclass into the digital age is an issue that I think societies are grappling with, including Singapore. And the recent boom in sort of a tech-driven gig economy is one of the areas in which this particular segment of our society can get a first step and a first taste of going into participating in the digital economy. Technology has made sort of large-scale gig work possible, better, but also safer. And I think for many workers in our platform, we have also become a very critical source of income. For some of them, it supplements their core income, but for a lot of our partners, it is actually the core income. And so really what we have seen is this boom of gig economy it is an important step for a lot of us towards digitizing or getting involved in the digital economy. But we certainly don't think that the gig economy is the only or the main solution as we transform the workforce into sort of Industry 4.0. Now, let me talk a bit about COVID. COVID is, of course, a major disruption for everyone, including for us, right? And I think there is a bit of two parts to it. On one hand, I think society start to recognize the importance of these everyday gig workers. They are unsung heroes. They provide a lot of essential services. And I think people recognize how important this economy is. On the other hand, I think there's strong recognition that it's a segment that's also quite vulnerable. Income security is not as good as somebody who has sort of a typical sort of employment jobs. Access to healthcare is not as good, and John covered a lot of the issues that face sort of this informal workforce, gig workers. And of course, during COVID times, because their income is affected and they continue to need to work, there is also mental health risks and issues that our gig part workers particularly face. And of course, as Grab, and I have a slide to show, when we first started this thinking about COVID and managing COVID, we just really went all out and tried to do as much as we can to help, right? Both in terms of safety, making sure that our workers can continue to work safely for our consumers, making sure that their income is to a certain level protected together with the government, making sure that the impact of COVID is mitigated. And then, of course, to also contribute where we can towards society in terms of being a major tech platform in Singapore and how we can contribute towards the nation's response to COVID. So in the short term, I think the company has tried as much as we can to manage the short-term impact of the economy. The challenge, I think, now is as we are emerging from the circuit breaker, as we think about the long-term impact and potentially a prolonged recession, how do we prepare the gig workforce, the gig economy towards that new scenario, towards a prolonged recession, right? So for us, it's a few things that we need to think about. One is, how do we make the system more resilient and more robust? I think COVID, if there's one silver lining about COVID, is that it really brings the question about how do we get this gig economy ecosystem not just working for everyone, but being robust and sustainable, such that consumers don't overpay, our gig workers earn a decent and secure living, and companies like us who provide the platform can be sustainable and can be there for the long term. And so these are the questions that I think we are now starting to see becoming much more pertinent, much more critical as we talk about, as we look forward. The timeline has, of course, squeezed a lot. What we could have done to strengthen the platform in a few years has been squeezed into a few months. So within the company itself, and I don't think it's just Grab, but a lot of the fellow gig economy companies are reflecting and thinking about how do we use the lessons of COVID to rethink how we are running our business model. Can we make it more sustainable? Can we make it more robust for the workers who earn their main living with a platform such as ours? How can we support them and manage some of this risk that comes along? Maybe one final point is, I think the answer to a lot of these questions will not be sort of finding old world solutions to fit into that, which is always a temptation, right? Let's take old solution and try to make it work. I think the solutions would be two things. One is, of course, collaboration with the different parts of society, government, unions, etc. But the other one is really innovation, right? Innovation, for example, on the fintech front, so that we can do very customized insurance schemes. Now, there is where I also feel there is a bit of a challenge, because on the one hand, innovation is always great, but if you're innovating on, say, a vulnerable segment of the society, that's always something we have to tread very carefully, because we don't want to be seen as applying sort of fintech solution on a vulnerable segment, and there could be danger of exploiting these segments. So innovation, but I think also careful innovation, and we recognize the responsibility that players like us need to take, and that the solutions will take some innovation and collaboration across the different parts of society.
Great. Thanks, Yew Heng. And I think it'll be nice to probe your thoughts at the end about how technology platforms like yours can perhaps help individual workers come together and share their employment risk. We'll take that on later on. Now, may I introduce Dr. Ong Qiyan. She's Deputy Director of the Social Service Research Center at the National University of Singapore. Together with Associate Professor Walter Teixeira, she proposed the once-off Majula Universal Basic Income Scheme to help workers tide themselves through this crisis. Whilst that scheme wasn't intended to be a permanent feature of the social safety net here, perhaps there are elements from that that we should be considering. Or are there other schemes such as full-blown UBI or unemployment insurance at a national level? And what about community-level solutions that we might consider? So Qiyan, you have the screen. Thank you.
Thank you, Chris. Thank you for the previous speakers for setting the stage, really useful for me. So my expertise is on low-wage workers, so I will focus exclusively on them. I will share with you some information, because without the information, we don't really know what we are talking about, what are the conditions that low-wage workers are facing, and hence how it will be difficult to talk about the solutions. Okay, so may I have the slides, please? Yep. Okay, so let's go to the first slide. Okay, so following Yew Heng's talk. Okay, so first I would like to share with you about low-wage own account jobs, or you can call it freelance jobs or self-employed jobs. Okay, so there are different names for the same jobs. Okay, so I'm going to share with you data from 2017, because it is important for us to understand what are the existing problems that faced by low-wage workers before COVID, and how COVID situation actually magnified some of these issues. Okay, so this is a brief summary of the state of low-wage own account jobs in Singapore. So as you would have expected, most of them are probably taxi or Grab drivers. Okay, based on the report on own account workers released by MOM in 2017 or 2018, there are 190,000 primary own account workers in 2017. Okay, so that means that these workers drive Grab or taxi drivers as a main job. Okay, so that's the main job, and the median income is $2,500 per month, which means that 50% of them earn less than this per month. And of which 42% actually earns less than $1,670 per month for the full-time main job. Okay, and we can also see on the top left-hand corner of the screen that 77% have post-secondary and below education. So we are talking about the lower education group being the bulk of the own account workers. The top three concerns that they have listed about own account work basically are all related to social protection. Okay, financial stability, as Yew Heng has mentioned, and the next two, medical and retirement funding. These are all social protection kinds of issues, which is why we have to think about employment risk in these aspects, and how can social policy helps to insure them against some of these challenges. Okay, so the characteristics of these jobs basically are listed on the right. Okay, so these jobs have no paid sick leave. Most of them do not have. I know that some companies do offer them, but only when the days of leave exceed a certain threshold. Okay, they also don't have annual leave, and the key characteristic is that if they don't work, there is no income. Okay, so with these three characteristics, then what can we infer about the risk factors of these workers during the pandemics? So it is very likely that, we are actually putting them, we are putting them in the impossible position of having to decide whether to feed their family or to take care of public health risks. And that's a very difficult decision for them to do. If they stay at home, if they are feeling slightly unwell, then they risk not being able to feed their family because there's no other forms of cash inflow to the family. So internationally, there is agreement that these workers are likely to be less compliant to mitigation measures, but we have to remember that it is because we have put them in a very difficult decision. And also the high health risk is compounded by the fact that these workers are often in high touch jobs, okay? So they meet different peoples. And because of the meeting different people, it exposes them to high health risk. And they also tend to have, being low income, they also tend to be in a smaller living housing, and hence, the risk that they bear extends to their family. Next slide, please. Okay, now apart from own account workers, we are also worried about full-time workers, okay, people in full-time jobs. Here, I want to highlight to you this thing called the triple low full-time jobs, okay? So full-time jobs, technically, workers are entitled to sick leave and annual leave based on the Employment Act. Okay, however, although workers are entitled to these benefits, they may not be able to use these benefits. Okay, and the reason being because they are worried that they will lose their job. Okay, and if they you can see that the proportion of people losing their taking leaves actually varies quite a lot across industries. So I want to highlight to you the industries in red, where these are these industries are where the triple low jobs are most likely to be found. Okay, so triple low jobs are like, what are these triple lows? First, they are low wage. Okay, then they are low entitlements. They have very low number of annual leave, and they also have low bargaining power in terms of their ability to take sick leave. Okay, even though they are entitled. And if you look at the chart, for the two circles on the left, industries like accommodation and food and services, as well as administrative and support services, these workers in these jobs half of the workers in these jobs tend to earn less than $2,200 to $2,800 per month. Okay, so they are kind of low paying jobs. And interestingly, you may have noted that these jobs pay about the same as the own account jobs. Okay. And in 2017, less than half of them reported taking sick leave, whereas the rest of the industries are taking sick leave at about 60 to 70% of the time. Okay, so this shows that these workers are systematically in a poorer position to negotiate with their employers, even when they are sick. We also see the same situation in construction and manufacturing, especially for food, beverages, and tobacco. So even though their median wage is much higher, but we expect that some of the workers in these industries suffer the same triple low kinds of jobs, okay, where they have very low entitlements and difficulty in taking sick leave. Okay, so what's the implication to a pandemic? Unlike the own account workers, right? These workers will, even if they are sick, then the decision will be whether they should report to work or face the chance of losing their job if they don't. Okay, because the companies need them to report in. So this is very challenging, but you can see that the kind of risk factors posed by low wage workers are pretty much similar. All right, pretty much similar. Okay, so let's go to the next slide. So what is the outlook for low-wage workers after the circuit breaker? Okay, what we will expect is that because of the reduction in demand for goods and services, we would expect to see a reduction in wages or a higher unemployment rate. And therefore, we expect that even for existing jobs, with further depression in the wages, then the triple low jobs, which are already precarious, will become even more precarious. And some of the jobs which are not precarious will now become precarious, okay, because of this reduction in wages. So what it means is that a lot of the full-time jobs will become more and more comparable to own account jobs, which is also what we have seen, that many of the workers are now, becoming delivery drivers for Grab and other companies. And so we will keep seeing that, okay, because the two kinds of jobs are becoming more and more comparable. Now the question that we have to ask ourselves is, if more of them take up low-wage own account jobs, is this actually good for getting out of poverty? Because that is what we are concerned about with this vulnerable group. And then the next question is, since own account jobs are pretty lacking in social protection, and we have more of the population in these jobs, is this actually good for the society as a whole? Okay, so these are big questions to answer. Next slide, please. Okay, so I'm suggesting 3 vitamins, okay? Just to improve low-wage works, okay? And vitamins meaning that they may not be cures, but they will definitely improve the resilience of the population against pandemic. Okay, so first, I think we need to start strengthening the fair treatment of employees. What we have just seen, or what I've just shared, are data from 2017, 2018. Okay, but in the next year or so, we will see even more challenging times and difficult decisions by companies. And hence, we need to have to ensure that the employees are also fairly treated. Okay, so what are some of the options that we can have? So first, we can explore government paid sick leave, okay? And the reason is because small companies may have difficulties in providing the same level of benefits as large companies, which may be why some of them will not be able to allow their workers to be on sick leave, even though it's actually better for the public, the public's interest. And hence, to reduce this kind of decision difficulties, it will be useful for the government to think about having sick leave as a government paid, just like other kinds of leave, maternity or paternity, okay? And for the audience, right, you may have realized too that actually for maternity leave, it applies to both full-time employees and self-employed. So again, for consistency, why not have sick leave that is also applicable for full-time and self-employed workers? Then that will serve as a natural defense against the pandemic. So from there, okay, so apart from that, we know that there are still some companies still struggle to provide some government paid leaves, even though they exist. So to give them the carrot and to help them with the business costs, one way is that the government contracts should start to set some sort of norms, okay, by making fair treatment of employees as part of the assessment criteria. So if that is, so instead of just hiring companies with the lowest cost, we should start to think about this fair treatment as part of our considerations for hiring. Okay, so all these, apart from punitive actions against violators, should help to improve the treatment of employees. Okay, then the second option, as Chris has mentioned, things like what I have suggested with Professor Walter Teixeira, so MUBI, or some sort of an unemployment insurance, okay? And these kinds of schemes, what it is doing is that it gives low-wage workers some basic income so that they are able to say no to jobs that are really, that has really very bad conditions. And this will force companies to provide better jobs, better benefits, and hence the transition process. So we are going to see the transition process in the next few months. If we have that kind of basic assurance, it will prevent companies from taking the most direct route of reducing business costs, which is to just cut wages and just reduce the benefits for workers. Okay, so companies will have to reinvent or innovate to think about better ways to reduce costs other than to cut the wages of the workers. Okay, and then lastly, because we have Desmond here today on the panel, and he has already spoken quite a lot about the role of unions. Yeah, we definitely, I definitely believe that unions should take a larger role. When the government is very preoccupied with, dealing with the COVID situation, ensuring that the Employment Act is enforced actually is something that the unions should be looking at. Okay, so that the workers can be if workers cannot take leave, the union should step in to work with companies to make sure that they are fairly treated. Okay, so this rounds out my thoughts about the situation. So maybe we will answer some of the questions later. Thank you.
Great, thanks, Qiyan. We'll post up Qiyan's slides on our website later on, so for everybody to have a look at in a bit more detail. There were quite a lot of information included in those slides. I thought we'll kick off the discussion now on a consideration of some of the state-level initiatives. As you heard from John and Desmond and also Qiyan, this, and Lim Yew Heng as well, this is a crisis situation, and the governments around the world, societies around the world have been overwhelmed by this, once-off concentrated event where everybody is facing much the same situations in the same boat. So maybe we can start thinking about some state-level initiatives, maybe things like basic income, universal basic income, or unemployment insurance, or even things like borrowing from your retirement savings. So in Singapore, some suggestions have been that you should be able to tap on your central provident fund, your pension savings, to tide you over this period. So just maybe pose that question to John first, and then maybe Qiyan, Desmond, Yew Heng, you want to chime in as well?
Yeah, thanks, Chris. Yeah, I mean, I think certainly the question of what's the ongoing underpinning from government to individuals is vital as we manage the pandemic. And I think Ong Qiyan in particular highlighted the issue of getting the economic incentives right for individuals, because to manage this pandemic risk effectively, we can't really put individuals in a position where they feel they need to put themselves at risk and indeed potentially spread the virus because they kind of can't afford to stay at home and protect themselves or their families. Equally, we can't have a state benefit that's too generous that either the state can't afford it or indeed there's an economic disincentive to get back into the workplace. So finding the right level there is vitally important. I think you're right that looking at temporarily giving access to long-term pension savings may be a way of offering relief to individuals. It's something that I feel quite conflicted about, because much of my career I've been encouraging individuals to save more for retirement and making sure that government policies support this. But in times of extreme need, then offering individuals to access a small amount of their pot to get over an exceptional period of distress might well be valuable. And I think it was also interesting, the suggestions from Yew Heng Lim about using technology to maybe facilitate more private innovation to make sure that there's maybe targeted forms of insurance. And we've seen, for example, in the banking market, the emergence of peer-to-peer models. We've seen very little of that, I think, so far in the insurance market, but that might be a way of offering affordable, targeted insurance without some of the profit margins that we sometimes see being taken in the private market. So I think those are a collection of areas that policymakers should be looking at, Chris.
Yeah, thanks. If I can ask Desmond to weigh in on this issue. Clearly, the government has put in a lot of effort in the short term to tide people over. So you've got the job support scheme, you've got the self-employed income relief scheme, $20 billion, which is a huge amount. But as we think about the long term, how sustainable is this? And do you think that if we are in this for the long term, maybe we should be thinking about whether these temporary support measures might actually be with us for quite a long while, and therefore, if not, then why shouldn't we make them permanent?
I think those are very good points, because we are always trying to balance the immediate need, which is a very sudden and quite terrible impact on workers. At the same time, you need to guard against eroding their long-term viability in terms of financial support. So when you have ideas such as, can they draw down on their CPF during this period of time? Firstly, it assumes that the lower wage workers have a lot of CPF to draw down. And if you start drawing them down now, I'm not too sure how good would it be for them post-COVID. You're sacrificing their longer-term future, you're mortgaging it for short-term relief. So I think that is where the state need to come in and say that for this kind of special circumstances, we do not want our people to mortgage away their future. You come in with a job support scheme, you get companies going, you provide COVID support grant, 3-6 months of support, you help their families to get through this period, and you incentivize companies to want to train workers. As a unionist, workers not only just need source of income. I found really that when they have hopes of getting a job and that there is certain training involved to equip them to get those jobs, workers generally will end up better than being on handouts over a prolonged period of time. And that is where we need to strengthen certain structures. For example, Qiyan's point about Employment Act and stuff. A lot of the Employment Act thing, they don't apply to self-employed persons, your SCPs. So that is not going to work for them. You do need to make certain legislative changes going ahead and say, now, what are the basic things that we need to take care of them? If they are going to be in these jobs, are the current legislation sufficient to help them? And our current thinking is that we think that we can represent them better. As individuals, I think it's always going to be difficult, but if you can bring them into a larger fold like NTUC, I think we can better represent their interest. And I think that growing interest, increasing membership, as we have seen over the last few months, was just a great indication that people do want representation, and they want to have a collective voice.
Can I just follow up on that point? You said that there's been a surge in terms of sign-ups, memberships amongst the self-employed and the gig economy workers. But is there some fundamental difficulty in a national umbrella organization like NTUC in reaching all of the different kind of workers out there? Obviously, there's a range of people, and whilst they all have different profiles, different risks, it's very difficult, I would imagine, for you to reach all of them, and for them to also end up with the right solutions for each of them, because a Grab worker, a driver might have a different situation to a freelance software engineer, for example. Right? So I'm just wondering whether there might be more customized approaches to addressing these people.
I think we do have certain unique strength. I think first is we have about 1 million members, and that's fairly solid. And we have some rather okay doing social enterprises. For example, NTUC Income, NTUC Fair Price. Now, by them joining us, what they're able to do, every member gets insurance coverage because we're part of a larger collective. We can insure each other. So when we're talking about fintech, trying to fill up some of these gaps, just by being an NTUC member, you really get insurance coverage. You not only get to tap on some of these common services, legal support, for example, employment support, for example. These are some of the things we can provide as core services to anyone who wants to join us. Now, because we are also a larger entity, I remember at the start of COVID, we were actually working quite closely with partners like Yew Heng from Grab and said, hey, the drivers have problems now. how can we help them? Or even before this episode, remember we have the PMD issue, and you were not allowed to write. We say, hey, how do we help them? So through our setup, we went to talk to some of our MOT colleagues, Ministry of Transport colleagues, and of course, friends like Yew Heng's company, and work some support schemes for them. And we start to see that this is, I think the workers need us to do this, and I think we want to go out in a bigger way to help them. So there is benefit to join a bigger platform, a bigger ship that will help to support them, especially in these choppy waters.
Thank you. Thanks, Desmond. Qiyan, on the issue of workers, not having the ability to organize, I'm thinking about unemployment insurance and this scheme about borrowing from your pension fund. Not all of the low-wage workers that you were talking about in your early on your presentation will have enough pension savings to draw down upon, and they, many of them won't have the ability to fund from their current income to pay for insurance premiums to buy enough unemployment insurance. So, what do you think about that? Is that the limitation ultimately for this group, and therefore ultimately we need a state-based solution?
Yeah, so I guess, Chris, you have rightly pointed out what are the problems with unemployment insurance, which is that you actually need to pay to get into it. Drawing down CPF is very difficult for low-income households. I mean, they have hardly any money in the CPF, and if they have, most of it will be to fund to pay for their housing. Okay, so it really puts them at a very precarious situation if we need them to draw down their CPF to tide over the situation. And this is the reason why, in the end, we end up, Walter and I ended up advocating for a MUBI, right? A UBI that is temporary, and to tide over these very uncertain times, okay? By providing a certain quantum of income, basic income for 3 months at least, and then which will be financed by a higher tax, personal tax, the next year. Okay, so depending on whether your income is high, if you are lucky to be in an industry that is doing well this year, then next year you will help to pay off some of this support with your higher income by higher taxes. And the reason for that, the other benefit for that is that MUBI will cover not only the unemployed, but people who are employed now, but next step will become unemployment, or it will also cover people with reduced income, which is actually what we are seeing during the circuit breaker, that many of them are still employed officially, but they are put on leave of absence, they are put on reduced income because of weak demand, because the companies are not allowed to operate. So we thought that a scheme like this will be will make more sense. It will cover not only the low-wage workers that I was talking about, but also non-low-wage workers who are also at very high employment risk at the current situation. Yeah. So that might be one way to think about it. The side benefit of having a system like this is what I've mentioned just now. As we progress in the pandemic, the low-wage workers will have very, very low bargaining power because of high unemployment. And what I didn't mention is this: our social protection system, right, which is financial assistance for the low-income families, a lot of times are conditional on employment. Okay, so if you are low wage and you want to obtain financial assistance from the government, many times you will be encouraged to be employed. Otherwise, to avoid moral hazard from setting in, we will wean them off the financial assistance. Now, because of this access to financial assistance, means-tested financial assistance, then the workers will really have no choice but to take up any job that they can find. So that really gives the companies a lot of bargaining power over the workers. And hence, it is very important that Desmond and team are doing a great job, getting more of them on union and representing them, so to make sure that they are not unfairly treated post-COVID. Yeah.
Can I
Thanks,
maybe
Jen.
add one thing? This you
Yeah, please go ahead, Yew Heng.
So I'm a big fan of NTUC and the union in general, but I also want to share how, from our perspective, we think about representation of our partners, and there is compelling business reasons to make sure that they are well represented. One is our experience have been some of our best partners, right? The guys who get the 5 stars, who have high fulfillment rate and really is the big bedrock of our platform. These are very loyal, long-term partners of ours. And for us, it's very critical that we understand their needs and their challenges, because it's in our interest to make sure that they find the platform attractive, sustainable, responsible. So that's one. And what we have done internally is that we actually have a team of Grab employees who really represents the voice of these partners, and they are the ones who we tap onto to say, how do our workers, how do our partners feel about, for example, if we were to do ABC, and they would say, no, I don't think it makes sense, and their job is to make sure that they really understand it. Now, I think, of course, it's never a journey that can be done. We need to do more, but I think from the platform itself, there is also very strong recognition that representation is important because it makes business sense.
Okay. So Yew Heng, let's follow on. I think you mentioned earlier about I mentioned earlier about this whole idea of the technology platforms like yours, providing that sort of ability for your partners, your contractors to get together, band together to provide those services, those risk sharing for themselves, right? So you don't step in to provide it for them, but you provide them the tools to enable them to share their risks and share services accordingly. Maybe touch on some of the points that John was talking about earlier. We now have InsurTech solutions, P2P insurance, where you're essentially getting like-minded individuals in the same sector, perhaps together to pool their risk, and all you need to do for them is to have the systems, the technology to arm themselves with an app or some backroom services to kind of help them with their the pooling of their risk.
So I think the first thing is we as Grab do also buy insurance coverage for our partners, right? For example, on COVID, we bought COVID insurance for the partners in Singapore. Those was still the days when you can actually get COVID insurance coverage. You probably can't get it now at this late stage of the pandemic. So there is some insurance coverage that we provide for our partners. That's one. The second thing is, again, innovation required, right? So we for example, we partner with NTUC, and in Malaysia we tried this as well. We do micro insurance. So every ride, 1 cent, 2 cent of that ride goes into buying insurance that helps protect the drivers. So there are examples of sort of this kind of innovation that we can do. What is also interesting is we have and because the gig workers are usually not very well banked, right? There is not a lot of information about them, and very hard to credit score them, right? To assess their profile. And because they are on our platforms, we know in detail their earning capabilities and is able to give a much more accurate assessment of their risk profile, and able therefore to much better provide insurance coverage where, because there is no information, they don't file for income tax, they don't have a credit card, it's very hard for insurance company or for bank to provide any kind of solutions. But because of platforms like Grab, we are able to get a bit better sense and access better that they have income, that they through the last 5 months of work, they have good income, and therefore they can get access to, for example, personal loan or insurance coverage that they would otherwise not have gotten. So I think that's the power of the data that's coming through in a platform such as this could also be part of the solutions of finding ways to extend coverage where traditionally they would not have been able to.
And Yew Heng, just to follow up on that point, the data that resides with you, right? Is that likely to be shared with other institutions, other organizations, with the workers themselves, perhaps, to help them organize it, or is it still in the domain of your platform?
So I think one is the basic is we need to have data protection, right? So it will not be shared, and we will not be able to circumvent any regulatory circumstances on that. Having said that, there are ways in which, with the permission of our partners, we are able to then share data and get into better solutions for them. Right, so that are sharing, and we're very happy to share data, maybe not just on insurance, but we have been, for example, sharing macro data with MTI, because we are one of the folks with the kind of data for you to have a almost real-time gauge of economic activity in Singapore, rather than waiting for, let's say a quarter later when MTI release results. So we have quite interesting data. We're actually very prepared to share data with partners and with government. Except of course privacy concerns and restrictions apply. Very good.
Okay, I think it's now time to open up to the questions that we've got from Facebook. And if you are on Facebook, please can let the questions come through. I'll package some of the questions up and pose them to the panelists here. There's one from Mr. Kenneth Tang. And it's talking about how we pay for all of this. The social support that obviously is in the short term as well as in the longer term. Some of the longer term measures that need to be put in place. So the government has obviously put in a lot of support measures. The question is whether the private sector needs to also then step up and how can the private sector share this burden with the public sector, and what does it mean for kind of margins and profitability going forward? John, any of you, the panelists, please, if you can weigh in on this issue.
It's such a hard one, Chris. I mean, the governments themselves are taking on kind of unprecedented debt. Beyond that, they even took on in the global financial crisis. And in general terms, I don't think industry's suffering as well. And I think their ability to step up in the foreseeable future is pretty tough. I think that the question really, I think, for government is how they unwind the debt position and the pace at which they unwind it and how they try and recoup from different segments of society. And it's, I don't pretend to have any answers today, but I think there are, major questions around, intergenerational fairness that need to be asked. I mean, we're already seeing that the current generation of workers have probably endured a less generous working environment than maybe their parents have done. And this debt burden, if it only falls on the current generation of workers, that can only exacerbate the situation. So I think governments need to try and be creative about thinking how they spread the recouping of the debt and over the time scale over which they do that. But I'm not sure the private sector in the foreseeable future will be able to do it. But I think there's got to be probably a more creative reimagining of society in future. I think as we start to ponder what the world will look like beyond COVID, whether we're having to deal with it on an ongoing basis, I think it's a great opportunity to just think about how things might be quite different and what our new bargain or political ideology might be in the future. But it's hard.
Chris, maybe allow me to weigh in.
Yes, please go ahead.
Yeah, I think in Singapore, actually, we were quite fortunate as we were rolling out all these massive support programs. We didn't actually have to borrow. It was financed through our reserves, meaning that the one big benefit from this, as we exit this crisis, we will be able to invest more in capex, and rather than paying off the interest, because we never have to borrow to run through all these big support programs. So I think that is something that's going to put us in quite a good state. I do think that companies can do something to contribute to this cause. I think firstly, I think there have been retained earnings for certain companies, especially those have been a better balance sheet heading into the crisis. Some that are still in viable sectors, healthcare, pharmaceuticals and stuff. I think those do have the books to really support more growth. And the growth that we really want them to look into is investment in training. Erosion of human capital in any crisis is the biggest impediment to a quick rebound over the history of the crisis we had. The better skilled we have, the better we are. The easy thing to do is to let go of people now and try to rehire quickly. So if companies can go in, contribute to the cause, train our workers, retain them, that is going to make unemployment a lot manageable, shorten the period of unemployment if workers have to be laid off because they are better trained, and just help the economy to get into a better rebound once we exit COVID.
Okay. And now that we're touching on a little bit of the issue about human capital development and retraining, reskilling, I want to link that idea with giving workers the space and also the income to support themselves whilst they do retrain and reskill. And I'll touch on some of the things that Qiyan was talking about in her presentation earlier on about schemes like universal basic income, helping to provide workers that income during the point at which they are reskilling and retraining for new jobs. And Qiyan, maybe you can comment on this, that that this needs to be paid for, and maybe workers are along the lines of your modular universal basic income scheme, essentially borrowing from their future. They will repay this back with the taxes that they will pay once they have earned new income from those new jobs, and then they'll pay tax to repay that income that they borrowed during the times when they're retraining.
Yeah, so that's the way that we thought we will finance the universal basic income, right? Which is to so I think, like Desmond said, we are very fortunate because we do have reserves to support us at least in the last 2 months. So up till now, the circuit breaker measures, all the policies that are in place are funded mostly by the reserves. However, the question remains as to how long this pandemic is going to last, and whether we can keep on drawing down our reserves to to pay for all the interventions and policies. So at some point, we must realize that that there is social responsibility for us to contribute rather than to keep tapping on the reserves, and that's when a scheme like MUBI should be considered. Okay, so those who are affected, everybody gets the benefit now to secure against to insure against the uncertainty, and those who have higher income in these uncertain times can contribute a little bit more. Of course, we can think about how long this scheme has to be financed. Depending on how long it is going to extend, then we can think about whether there should be a temporary increase in taxes for a year or for 2 years. Okay, so that is all calibration. But the idea is that for those who are able to obtain a higher earning, then they should pay higher taxes to help support this pandemic. And I don't see I mean, now that we are discussing this, I feel like we could apply the same kind of thinking to companies as well. You see, so companies are experiencing great difficulties now. The time ahead is very uncertain, not just in terms of demand, but also the supply chain issues internationally. So with all these risks at the background, it's very difficult for us to ask companies to chip in more, you know, and or to think about how much they want to chip in. Okay, so they need to survive first, right? But there is no harm in thinking about what if you manage to make it with all the state support. See, so if the government is really supportive of and help you to survive to tide through the pandemic, what are you willing to give back in terms of taxes, you know, to fund all these programs that we have for you? So there might be a little bit of room to do that, both on the individual side as well as for the company side. Okay, at least from how I see it, without distortion in the incentives to work or to earn profits. And I want to go back a little bit to what Yew Heng said. It is great that Grab, you know, is listening to the feedback from the workers, and is only able to do it because there are many workers under Grab. But actually, for full-time job workers, the ones at the highest risk are those with small businesses, because small businesses actually have the highest business risk. If one person doesn't report for work, it's very difficult for me to run my operation, you know, in my 5-man company. So that's why, that might be one of the reasons why, you know, sick leave and leave in general is very difficult for them to approve, you know, their workers to go on leave. So then who should rightly represent these workers, you see? So individually, they are in this company, and they may have very little people, very few people that they can rely on. And that's when the unions will be the most, you know, the perfect place to help to gather them and to speak on their behalf. But it is very important to do it right now, because the bargaining power is very, very low going, I mean, in the road ahead. And we are not sure about what kind of, you know, like, payouts that we are going to give to the low-wage workers. So preferably both must be in place, union representation, as well as, you know, like some sort of payouts to support these workers so that they don't succumb to poor job conditions. It's very difficult to recover once, you know, the companies have it in them that, okay, you know, people are able to tolerate this kind of work conditions, so, and this kind of pay. So I won't have any sort of incentive to adjust it upwards when things get better. So it's better to prevent them from making the jobs worse than to force them to improve the jobs later, I think. Yeah.
And Chris, if I can...
Yeah, go ahead, John. I'll come back to my point.
Very quickly reflecting on the role of the private sector. I'm very pleased to hear that you've got government reserves, which is kind of unusual for Western economies. But in absence of government reserves, one of the, I guess, sectors of the private industry that's actually been very helpful in alleviating the short-term burdens been the banking sector. So as we've gone into this crisis, the banks have actually started from a very well-capitalised position, which they weren't 10 years ago in the global financial crisis. And that high capital position, coupled with a relaxation of the solvency requirements, has enabled banks to support many businesses who are experiencing short-term cash flow problems, in anticipation, of course, that they end up being viable in the long run and are able to repay. So that's been a very important feature, I think, in the, you know, some of the Western economies, that the banking sector has actually stepped up and made quite a significant contribution to keeping companies afloat. So if you do get to the unfortunate position where your reserves are starting to pale, the banking sector might be a place to support.
Thanks, John. I was just going to follow on from what Qiyan was saying, and pose the question to Desmond then, you know, about the issue of unions and trade associations in helping these self-employed workers, these gig economy workers. And, you know, obviously there's quite a lot of support coming through from the government at this stage. So the job support scheme and the self-employed income relief scheme. Is there not a sort of a way to then peg the provision of this support, this assistance, to sort of signing up membership of unions, right? So this embeds the relationship between the workers and each other through the union, right? And then that therefore becomes this more permanent relationship, and you can then activate more people in this regard.
Chris, great point on this. There's always two things we look at. One is the cause identification. That means the workers see us as a viable partner and their voice for them to address disparity in bargaining powers. I think Qiyan is perfectly correct, especially for the lower wage workers. They really find a very strong sense of cause identification. And even you start to see PMEs and start coming in and say, we believe in your cause, we want to sign up as members because a critical mass is important. We do positive discrimination. If you sign as a member, we do come out with our own funds for hardship support during trying times. And that's not only just during the pandemic period. Ever since we started, whether is it as a member in a cooperative like Fair Price or Income, members do get added benefits. But we want to move away from the mercantile benefits to now saying that where there are places whereby the playing field is not level, NTUC can come in to help you to level those playing fields. I think that is where we're needed. I think the experiences in many countries have shown where trade unions are stronger, workers tend to be better off. And you not only just see that negatively in the United States, but you see it positively in the Scandinavian countries. I think that we do want to come in a state whereby we are not out to make employers worse off. In fact, we want to make employers into strong companies. We want to make sure that companies emerge from COVID stronger so that my workers can have jobs. So I do see a stronger role for unions, especially in the spaces that Qiyan identified, the lower wage workers, the own account workers, especially those that are not so, they're not paid well. I think we do need to come in and represent them more. We think that there's good opportunities for us to work with our partners to say that how can we up the level of legal representation for some of them. Sometimes our hands are tied. The mere fact that they're contract for service workers means that by law, there's a limit to how much we can represent them. And I think that is worthwhile for us to look into. Do we then now need to change some of these legal constraints if we think that this group of workers are going to grow in numbers and significance over time? So especially in their contribution to GDP. So yeah, I think there's going to be a next bound of study for us, and who knows, we're going to work with the Social Service Research Center at some point. Hearing good things from them. So Qiyan, we do have to catch up after this.
Yeah. Yeah, so I would like to just follow up on John's point, right? Which is that and Desmond too, that private institutions increasingly are trying to shift the risk from the institution to the individual, and hence coming out of short-term contracts. There are more and more people who move away. I mean, there is no longer very few jobs have this concept called permanent jobs now. Most of us are in some sort of contracts, and then with the own account worker kind of arrangements, so you can see that they are trying to push the risk more and more to the individual, but the legislation really needs to catch up. You see, to what extent can we allow them to do this to reduce business costs and make the profit from there, rather than to truly innovate and gain the business cost from higher demand or for better products. So this is the part where legislation and unions and workers really need to talk, and I mean to arrive at the tripartite kind of arrangement. That at some point we need to stop this kind of contractual agreements. And I really do hope that the triple low jobs will decrease in numbers, Desmond. Like if the unions can do more to look into these issues. The triple low jobs are terrible. Like it is just that there's just no. I mean, if you think about the situation of low wage workers, many of them are in very precarious situations at home. With childcare, with parental care. So the lack of flexibility, the risk involved in not being able to leave work to take care of my own health or my children, really makes it very difficult for them to hang on to a low-wage full-time job. But at the same time, actually our policy is to push them towards these full-time jobs because that gives them CPF so that they can, aspire towards home ownership. They can build up their retirement savings. So there is some sort of contradiction here in the triple low jobs, and we really need to aggressively address some of these issues. Yeah.
Can I add on a point here? We have been in Grab, we've been digging deeper into really understand the profile of the partners in our platform, right? And it's very interesting because we all have our own ideas of what the gig economy is, and as you dig deeper into it, you realize that it's actually a very diverse group of people with very different subsegments, right? There is the segment of guys who work 40 hours a week driving or delivering, and it's their main income. A lot of them a bit older, and don't really have find it's very hard to go back to formal employment. Then you have sort of single parents who treasure the flexibility that they have. They might not work full hours, but it's actually quite critical part of their supplementary income. Then you might have more transient people. They could be a little bit younger, but they don't look into gig economy as sort of something that is going to be there for long term. They do it for a few months and then they move on, right? So one thing I think we need to do is to really, and like what was presented earlier, to really understand the different segments and to recognize that for the different segments, different things are important to them. And as we think about solutions and regulatory, legislation to protect and to support them, I think we need to make sure that we take into this account of this diversity of people who otherwise might not have the opportunity. Because a classic question to me has always been, why don't Grab just hire all these people as your employees? The question, the issue is, a lot of them don't want to be employees because they say, I can't afford to be working 9 to 5. I like the flexibility. I certainly just want to do this for 3 months while I'm studying or what or I'm retired. I'm 60. I got, I'm still very active. I want to do something, but not so long. So we hear a lot of feedback as well on, and that's what I want, right? We can also sometimes apply solutions from the past to this because the gig economy does open up opportunities for a lot of people that would otherwise not been there, and they would just not have the opportunity. So I think that's actually quite an important thing to think about.
Yeah. Thanks, if I may weigh in just very short. I really think that it's very interesting how Grab has become our social insurance. Like for those with reduced income or no income, many of them are now with Grab, doing delivery jobs and driving. But the question is, should they be the ones to give the kind of social insurance to the society? And with that kind of technology, and market power, then all the more, everybody should be very careful, with how and to achieve that kind of balance between social responsibility and the individual responsibility.
Can I say one small thing, which is, I agree with you. I think there has to be healthy cynicism and caution on tech companies, right? Because they're big and maybe not us, but there's a lot of healthy distrust with tech. On the other hand, I think it's also quite important for companies like us to recognize that we're not just simply a platform. We now have around 8 million people across Southeast Asia who is in one way or another making money off the platform. That's 8 million people, right? And so what we do have significant impact. And I think companies like us, yes, while you guys might say maybe we shouldn't be given this much responsibility, but the fact is we do have this responsibility, and whatever we do, we need to make sure that it's sustainable and it makes sense for our partners. At the same time, we can't also charge too much to our consumers, and we need to survive as a company. So it's not an easy thing for us to do, but we certainly take these responsibilities very seriously, and we shouldn't be alone. But it's something that we lose sleep on and we think about all the time.
Great. Thanks, Yew Heng. And regrettably, we've come to the end of our session here today. We've talked about quite a lot of things. We talked about state level initiatives. And I think we can explore the whole ideas, some of the fundamental concepts behind universal basic income, and maybe see how we can apply that in the Singapore context. We've also talked about the role of unions and trade associations, and the role of legislation in terms of facilitating that longer term relationship between workers themselves and the state. And also talked about a little bit about the ways in which private sector platforms like Grab and other online platforms to help organize labor into to help themselves. Okay. Again, we haven't been able to cover everything that we wanted to, as I said at the start, but it is the start of the inquiry that we will be having. And I'll be pleased to get as many of you online as well as the fellow panelists here in the conversation. Before we go, I'd like to thank all of the panelists and all of you online for participating in this rather long session. It's overstretched by a few minutes. Thank you, John. Thank you, Desmond. Thank you, Yew Heng and Qiyan, for joining us today and spending this time. A round of applause. Thank you. And if for everybody else, please send us your feedback. There's a link to the feedback form on our Facebook page. We'd be very much pleased to get your comments about how we can improve this series going forward. Thank you very much, and have a good evening. Have a good rest of the morning, John. Thank you.
Thank you.
Thank you.